Hi, I'm Peter Akerley. I'm the Chief Executive Officer of Erdene Resource Development. We're a listed company on both the Toronto and the Mongolian Stock Exchange. We're an emerging high-grade gold producer on the very cusp of that first gold later this summer. And we're in a new district that we've discovered that we believe gives us very long life exploration upside.
Good to see you, sir. Good to see you. Well, look, I guess the news of the day really should sort of focus on production. It's near term, as you say. So, can you walk us through the kind of current construction progress at Bayan Khundii?
Sure, it's an amazing thing to witness, really. I mean, I stood out there last October on the soon-to-be foundations of some of these facilities, and we were just breaking ground. So today, we're substantially complete. We're right around 98, 99%. We'll go through July with the final electrical and piping detail in the plant. We'll get into dry commissioning in August, wet commissioning later that month, and ideally, first ore through the plant end of August, first gold in early to mid-September. Along the way, we've been through quite an intensive permitting process with the Mongolian government, beginning in December, where we've been through now 19 non-process facilities, the plant, and just last week had the final set of regulators on site for the chemical usage permit, which can be a significant one in Mongolia because that's effectively your cyanide approval, and you have to be extremely well prepared for that. So that came out with a recommendation from the experts on site to have their minister then sign off on that. So over the next few weeks, we expect to be handed that final piece of paper, and then it's on us to get that first gold out of the plant. But everything's gone very well, and we're very pleased with the stage we're now at.
Well, obviously on target. It sounds like for end of Q3 production, first gold. So that's good. Can you? I think this is an exciting bit because this is where you can feel the revenue happening, right? So just in terms of those. I guess critical path items, remaining components, crushing, grinding, transmission lines, etc. How's that all
Yeah,
working out?
so we're going through that initial process now of turning on the conveyor, turning on it's a jaw crusher ball sag mill, and all of that will get turned on and have dry commissioning as we move through July. The back end of the plant is a CIP with a Lucian circuit. We'll make a gold doré and sell that to the state, but everything is in place. We have experts coming in from the various suppliers of CITIC on the ball and sag, Como on the elution circuit. They'll be with us as we go through that process of startup. We've had experts on site from our insurers who bring on expert engineers from Marsh and Swiss Re, and they've been through their audits. We brought in our own experts to do audits of the build, and everything is I don't want to say passing with flying colors, but everything is in very good shape for startup. And I'm sure we'll go through our fits and starts over the next few months as we go from first gold on to commercial. But yeah, we're very, very pleased with how things have gone to this stage.
And what about the non-process infrastructure? The like the accommodation or chemical storage or
Yeah,
lab, etc.
interesting. When I referred to standing on soon-to-be foundations last October, we've not only built a plant, and the total capital for everything is coming in at 115 million US, but we've built a 370-person accommodation village with full dining, fitness, gymnasiums. Next door to that, we now are just about complete on a Cessna caravan landing strip, so people can fly in right next to the camp. That camp is now full. We have 370 people from our operating team now occupying that. We're going through that shift. So we have still on site about 550 people. We peaked at about 750 a few weeks ago. And now that transition is happening where we're going from that construction team into operations. And we have, I'd say, 85, 90% of our mining team hired. We're about 50 to 60% of the process team. And much of that has been streamlined, I guess you'd say, because we've had the benefit of our partner having 2,000 people employed at their site in eastern Mongolia, where we've been able to hire locally, set these people at their mine, train them, employ them, and now bring them back to our facility. It's been a great advantage to have a partner of that scale in Mongolia who can help us with that transition.
Right, and obviously you're sort of, I think you talked and you've emphasized, you're sort of over 90%. Done here, not much to go. But are you going to be able to kind of stay within the kind of capex budget? Do you think, or is there a contingency?
if you look back at our 2023 fees, we were 100 million target. We're now estimating and have been for the last 6 months, I guess, 115, so 15% over our initial target. And we're comfortable that's where we're coming in. We have 170 million available to us, or had from the very beginning, 40 million equity and 2 tranches of debt, 80 million from MMC as a shareholder's loan and 50 million from Mongolia's largest commercial bank that was brought in as a working capital facility. We're pretty much complete. There's probably 10 to 15 million to pay the EPC contractor, finish off that 115, but we've yet to draw 45 million. So we still have a buffer of 30 to 35 million to carry us through the next couple of months to get to that first cash flow. So we feel very comfortable with the monies we have available to us. We could stretch that out to mid-November if we needed to. So a good buffer in the kitty for that final stretch.
Okay, let's say this. So they're showing me the money stage bit here. For end of Q3, that's first pour, but you've got to do this kind of ramp up from up to nameplate, which you're sort of aiming for 85,000 plus. What are the kind of performance benchmarks that you're going to define commercial production with?
It's 85% of capacity, and I think it's 95% of head grade. So we're aiming for a 4 gram per ton head grade. We expect to be able to hit that in about 60 days following that first gold production, but we'll see. That's what we've allowed ourselves at this point. So mid-November for targeted commercial production.
Right, and the odds kind of like any kind of pre-commercial sales, during this kind of commissioning or the final stages of commissioning.
Well, first sale would be, the first gold bar would be produced by mid-September, and our sales would ratchet up from, let's say, about 3,000 ounces in that first 30 days up to 7,000 ounces, 6,500 to 7,000 as we hit that commercial production point per month.
Okay.
So we are expecting substantial commercial revenues during that period of ramp up to commercial.
Right, and you've mentioned obviously aiming for 4 grams per ton, and so what's the recovery you said?
It's 93 to 95%.
Right. Okay. So, and do you think, and how does that align with the kind of feasibility study of 2023?
Yeah. So that is still based on the feasibility study. We have just completed. We completed 918 holes of infill drilling for that first 6 months of production, and those 900 holes suggested to us that we needed to expand drilling. So we've now just completed another 200 holes, because it looks like the footprint in the top 15 meters is actually larger than what we had envisioned in the feasibility. Not only that, but the continuity of the ultra-high grade zones is improved upon what we saw in the feasibility. So we're hopeful we'll see a reconciliation that actually provides us with more ore and higher grade ore in that first few months of production.
And what about obviously between Bayan Khundii and Dark Horse, is there kind of blending strategy in place now, or is that something you're still working on?
So the 4 gram head grade that we talk about, we have 3.8 grams from Bayan Khundii and we have 7 grams from Dark Horse. So that 4 grams is the overall head grade of the combined resource. The vast majority of that is Bayan Khundii, as you know, with 40,000 ounces of 7 grams coming from Dark Horse in year 3. So year 3, effectively, we slot in Dark Horse, we blend that down to that head grade, and it allows us to drive somewhat deeper in the pit through some low grade to get to that average higher grade material again.
Okay. I'm just so conscious of all the things which have gone wrong in the stream, and I'm delighted we've got some new answers coming in here, and this isn't just another merger of equals story. This is new answers coming in the market. Fantastic. But in terms of the, I guess, the reliance and maintenance readiness of the equipment that you're using, it's coming what China and Australia, isn't it?
Yeah, so we've felt that we've picked the best in the business. We brought in the jaw crusher, the SAG and ball mill from CITIC. We have purchased the elution circuit from Como, so that comes from Australia and South Africa. We have put all the tanks and steel structure together with Chinese steel. But effectively, anything that we felt needed some, I guess, higher accuracy, higher quality, we've sourced those parts around the world. So whether it's near Europe, Canada, there's parts that's come in from all over the world. but the bulk of it from the China market. When you look at those big pieces, the ball sag jaw crushers.
Right. And then in terms of like how you manage like certainly during that like kind of ramp up phase, what kind of contingencies are in place for things like, say, hopefully not, but crusher downtime, or I think in the recent couple of years talking about reagent supply issues in the region as well. I mean, how do you manage all of that?
Well, at the front end of this, we've put redundancy on the jaw crushers. So we've actually doubled up on our jaw crushers. We have double the amount of capacity that we would need. In terms of CITIC, I don't think of ourselves as isolated from the suppliers. Obviously, they're next door in China, and we can have them on site in probably 24 hours. So I don't think we're any different than anywhere else in terms of repairs to the grinding circuit. In terms of the spares, you just have to make sure when we've got a full warehouse for this that you get yourself those 2 months of backup supply. So we're already stocking, whether it's balls or whether it's parts to reline the ball and sag. All of the chemicals will be in place. We've got a full chemical storage facility, probably second to none in Mongolia. So yeah, we're cognizant of the fact that we have to have a bit of more lead time, perhaps on some items than others, and have factored that into the initial capital costs and working capital.
Okay. And then coming back to it, you also mentioned bit of drilling there. So just in terms of expansion on the, because you had some pretty high grades. We're talking about like 7 grams a ton, and you think there was like 40 odd meters at one of the intersections. So is there kind of other plans for a kind of phase 2 of the kind of
Absolutely.
pit expansion program? Is that in the offing?
Yeah, I mean, this, for me, as you know, Matt, we are building the foundation with Bayan Khundii. We sat back in 2019 and said, look, we don't want to keep going to market, hand to mouth, and exploring this and hoping at some point this becomes 5 million ounces and we sell it or decide to build it. We made a decision. We had 500,000 ounces of high-grade gold at surface, good metallurgy. Let's go ahead and build this thing. COVID interrupted it a little bit. But it was really because we saw the potential of a new district and multiple targets around this that were high grade that we could get to if we had cash flow. And it was almost too much to try to take on with a couple of million exploration dollars here and there. As we hit stride at the end of this year, we're planning to have a 10 million annual budget for exploration to begin to tackle these targets. And just to give you a quick snapshot of those, you step out 200 meters west of our pit, and I think this is what you're referring to. We had 40 meters of 7 grams, highest grade intersections we've had to date, just last October. You step out to the north end of the pit, it was 40 meters of 4. You step north to Dark Horse, we talked about the 40,000 ounces of 7. That's another kilometer-long trend that hasn't seen extensive regional exploration. You go another half a kilometer west and we have Ulan, where we had 350 meters of a gram that's not yet in a resource. So we've got this great opportunity for expansion. I have no hesitancy to say we're a 10-year plus mine. We'll see where that grade shakes out. We'll continue to focus on the 4 gram at the first 6 years. But I think based on what we've seen to date, we'll be able to bring in those high grades to keep it up in that 3 to 4 gram range, well beyond the 10-year point. And then we have Altan Nar to the north, 16 kilometers north. You have another 500,000 ounces at 2 grams. So we have a lot on our plate without further exploration, which we intend to do, but there's a lot that we can add soon. Yeah.
I think there's a kind of a sense of the focus, because I think at Ulan, you talked in the past about plus 300 meters at just over a gram. You got to work out how, I guess, timing that, right? Because there's slightly deeper intercepts. I mean, have you got a sense of when that comes online, or when you want that to come online?
So maybe I'll just go back to your question and then come back to the sequence of how we tackle those. We've already started a scoping study to look at an expansion of the plant. And that expansion study has suggested we put a gravity circuit on the front end. We add another ball mill. There's probably 2 more tanks and some expansion to the elution circuit, which allows us to look at 30 to 40% higher capacity than what we have today. So if you assume 4 grams, maybe we get up into that 120. So 110 to 120 is kind of that number we think we can aim for as we move towards the end of 27. We'll go through the technical studies next year, get to steady state with the plant, and look at that expansion. But that ore today is readily available to the west of the pit. We have 500,000 ounces in the pit at $1,800 gold. Move that gold price to 3,000. There's a tremendous amount of resource that comes into the West. And I think between that and what we have along trend at Dark Horse, that's the low-hanging fruit that allows us to look to extend this out into that 10-year period, which would be, another 350,000 ounces we would need to add to push this out to 10 years. I think that's in front of us in those two areas. What we do with Ulan's a bit more complicated because I think I've talked to you about this before. There's a piece of government-owned ground that sits between Bayan Khundii and Ulan. And overnight, if that was to go to tender and we were to secure that as part of a bigger project, you could probably double the capacity of Bayan Khundii or replicate that plant and build a second plant. It's an unknown as to how the government handles that. We view it as a likely tender in the future, but let's see how that unfolds. And the reason that's so critical to Ulan is that 300 meters of a gram is the sort of the back end of the pit wall if you drive through our western property, through the government piece, and then into Ulan. So that kind of will wait a little bit before we decide, do we open pit it in isolation or do we look at a larger scale operation?
Right. Okay. There's a lot of moving parts, right? I mean, it's all good, but there's a lot of moving parts, and you got to think to obviously the market's very buoyant in the market. You're up. Your last 18 months, your share price has tripled. Very exciting. But these are the good times, and long may they stay. But sometimes they don't. So how do you? What are the things that you think you need to address now while you've got access to capital when you're a near-term revenue producer, and you've got all these kind of satellite options going on? You're talking about maybe it's a 10-year life of mine, but there's different ways that you can come at that. Economic studies, more drilling, and I guess honestly, once you're producing cash, perhaps you bought yourself some time to come at it how you feel you should most efficiently, not necessarily responding to market needs and drivers. So how do you plan the next couple of years out?
The optionality is significant, as you said. There's multiple courses we could take, but quite simply, it's expand to the west at Bayan Khundii, it's expand to the north at Dark Horse, give us that 10-year plus, and complete that scoping study, taking it to a feasible expansion at Bayan Khundii that gets us to 120,000 ounces. Everything else would be secondary to that. Lots of work on those secondary options, but that's the clear path to expansion, which effectively almost increases our production by, let's say, 30 to 40%.
But I wonder, do you behave the same way? We were saying when when companies get into production, they don't necessarily need to follow the development path of we need to put out economic studies all the time. We go, no, we understand what we're looking at. We understand how to feed the mill. So how do you imagine changing your behavior?
Well, we don't have those hurdles of public market studies in front of us anymore. So we will have the wherewithal with the cash. We'll have the independent expertise inside, and we'll just push forward to do that. There isn't going to be a PEA, a pre-feas and a feasibility. It's let's get this done, guys. And that's one of the real benefits of what our partner's done for us. It's a good mix of Western and Mongolian ways, and we can do things quickly and efficiently.
Right. Okay. And I guess now that you are, well, and your partner, you are producers within Mongolia, does that sort of open a few doors? Because you've done what you said you were going to do. You've done it relatively quickly. I mean, it's 10 years since you made that discovery, your first discovery, right? So do you think that helps?
Helps in the sense of getting things done in Mongolia, just getting through the system. Is that's the question?
Well, yeah. Well, it's one. Does it help with your relationships with the government? When you want to pick up licenses. Two, does it help you think in terms of people's perception of Mongolia as a jurisdiction? Early days, you and I were talking about, not effectively, where's Mongolia as far as most people are concerned, right? Does this help getting into production?
One, most definitely. I think we're very well respected, recognized as credible entities, perhaps the most credible in terms of this combination of us and MMC to get things done properly, find things and build them. So when it comes to a tender, for instance, you just don't win a tender on the cash on the table. It's your technical wherewithal, your experience, your history. So I think we're in a great position to secure additional properties and work with the government on a couple of different fronts. In terms of the recognition, absolutely. I just spent some time in New York and Toronto meeting with investors, and many of them hear about Oyu Tolgoi, but they really don't have an understanding of the opportunities in Mongolia. And that's what I'm trying to stress. It's one thing that we're about to become producers. It's another thing that we went out there, discovered a new minerals district that geologists had never walked on before, and we're hitting world-class grades in 3+ prospects, some of which aren't even resources yet. It's just trying to let people know how special that is in our business, and getting face to face with them is doing that. They're recognizing that potential.
Right. And just on the same thing, like I said to you, and I acknowledge you've done this in 10 years, what most people take 20 years to do, okay, or if at all. Are you in a rush to look at things like future JVs or spin outs just to, I guess, do sexy things in the marketplace? Or again, does the ability to generate cash moderate your need to sort of rush into things like that?
Yeah, so we, as I've just described, we got a tremendous amount on our plate, not only what I just described, but the Alton NARS, other acquisitions in the district, Zunmod. So there's a lot there to deal with, but we've always been opportunistic. Our team is constantly looking at prospects in Mongolia and internationally, and if something shows up that's too good to pass up, then we'll certainly act on it. But our primary focus is on the Bayan Khundii district at this point.
Okay, fine, understood. And just maybe, I guess, for people new to this, can you sort of describe the current, I guess, balance sheet, where you're at? And again, you're going to be producing cash in and be ramping up, but where are you today?
Yeah, so I talked a little bit about access to debt. So we still have 45 million undrawn. So we feel from an operating build perspective, that's all fine in front of us. As we hit steady state, we will be producing at this gold price about 200 million Canadian in after-tax free cash flow. That will be largely put towards the debt. We want to repay that debt as rapidly as we possibly can, with the only exclusion to that being we want to ratchet up our exploration. So later this year, we have 3 million budgeted. Next year, we have 10 million budgeted. But as I just mentioned, the number is quite large, and those monies will go towards debt, which we feel we can pay off in about 14 months. So with that out of the way, by that time, hopefully we're into the second development, expansion and/or development. So those will receive some of those funds. But we also have increasing access to debt at better terms. And some of that's coming at us. So maybe a refinance, maybe raise the money on that front. Ultimately, there will be money coming back to shareholders, and we'll decide what to do with that as we move into that 2-year out point. But it could be substantial, and at that point, we'll consider dividends and/or share buybacks if it's not going into that next development, which I think we'll have more than enough to do all of those things.
So that's kind of interesting. So it's a potential for, I guess, cheaper debt, people like EBRD, I suspect. And what about some of the kind of when developers are desperate and cash is short in supply? People have turned to streaming and royalties or alternative financing. Is that still on the table for you, or is that you just want you're now capable with as a producer of conventional debt, and that would be
again
more?
Much like we look at acquisitions, we're constantly evaluating hedging, streaming. Nothing has come up in front of us that we feel is that appealing to pursue, but we certainly keep ourselves educated, not just on the hedge side, but on the put side, and at this point, we're quite comfortable to stay away from that. As you may remember, we also have a 5% NSR that Erdene holds beyond the 50/50, which kicks in at 400,000 ounces, so around mid-year 5. If you apply that to the cash flow we expect at this gold price, that's approaching 20 million Canadian annually to Erdene. And that's something that's obviously of great value and interest to third parties. At this point, again, there's no point in us entertaining anything in terms of a sale of that, because the reason we structured that at the outset wasn't just for Bayan Khundii. It was, we believe this will be a multi-mine, multi-commodity district. And, if it's 20 million today on a single project, you can kind of do the math on what that would look like on a double up or a larger scale project. So we're excited about what that royalty brings us in the future.
But under no pressure to sell 5% or even part of that anytime in the near future.
Yeah,
it depends
there's really no need for additional funding.
Yeah.
Point. I mean, in the future, as we grow, if we're looking at an acquisition, perhaps that enters our vision, but at this point, there's no need. And at corporate, there's $6 million in the bank, which is unallocated, if you will. Some monies go towards zone-wide, but we're in good shape from that perspective too. There's a good buffer corporately.
Right, and things like I hate to sort of drag up ESG specifically, but in terms of that kind of social license stuff, obviously Mongolia, people are sort of sensitive to the I guess the environmental monitoring and so forth, and compliance, and et cetera, et cetera. Who or how is that managed, and how does it compare to, say, somewhere like Canada?
I would say partially driven by our work with EBRD, who are a major shareholder. EDC was obviously also in the debt discussions. Our ESIA, DEIAs have been done at a class or a level that would be at or beyond world standards, and that monitoring continues. As EBRD as a shareholder, we have to meet certain requirements along those lines. So from a regulatory or a banking perspective, we're beyond international requirements. But we're also a group of people that want to make a difference out there. So we're working closely with the local community to make a difference in the health and education areas, bringing clean water to the local town. So going above and beyond, I guess, would be the answer to that question.
Okay.
Yeah.
Okay.
Just to make two things I mentioned. One's backing up on an earlier question, but we're the first dry stack tailings in the country. So we are going through a filter press to conserve water. We're in the arid climate of the Gobi Desert, but also just from a safety and environmental perspective to treat that water, have tailings that meet that effluent qualification internationally and nationally. And going back to an earlier question you had about the power supply, we have built a 240 kilometer long power overhead transmission line to the border to provide us with electricity, not just for Bayan Khundii, but with enough capacity that if we double the size of that plant, it will support that as well. The cost of that, if we go to doubling, will drop by about half the kilowatt hour cost. So we've got this window now into expansion and or extension where that would result in probably a 10 to 15% decrease in our all-in sustaining costs, which wasn't factored into the initial feasibility. So just wanted to circle back on that as well.
Yeah, no, okay, that's fair enough. I guess the final question for me around consolidation plans.
Absolutely. So we just had our AGM on Wednesday. One of the matters in front of the shareholders was consolidation, which was approved with over 99% approval. We have put in front of shareholders a 6-to-1 consolidation. And the reason for that is, for most of my career, you go to talk to large institutions, ultra high net worth, who have accounts with big brokers in the US, and they will not look at a share price that was less than $1 at the time. Now, some of them are $2. If you want to look at a listing in the US, you're getting up into that $5 range. If you want to get onto some of the indices, it's typically in the $5 range. So this consolidation just gets more eyes on us from those very large funds. And I think it's the perfect time to do that as we transition into production to open the eyes of some of those bigger institutional investors.
And what else will you be doing? What sort of actively will you be doing to make sure that that happens? The rollback is the first step. Then what?
Well, just increased marketing. So this coincides with First Gold. There's a couple of other things we have underway, which include the Zunmai PEA, but getting out there and telling the story more in those places where you have those large institutions, and whether that's Europe or New York or elsewhere, we'll be doing more of that to tell the story.
Okay. Well, congrats on moving this thing through the phase so quickly, and appreciate the update. I guess next stop, first pour. See you then.
Forward to it. Yeah, maybe you can join us at site at one of these celebrations.
I'd never say no. Never say no.
All right.
Okay, Peter, thank you very much, sir. We'll speak to you soon. Thanks.
Bye.